and of course all the export oriented. But let's talk about SBI. Reported a good set of Q3 numbers. The company also upped the loan guidance from 12 to 14% to 13 to 15%. We have Nitin Aggrawal, Senior Group VP and Head of BFSI at Motilal. Nitin, morning. You've called it a splendid showstopper to the Q3 earnings season. What is the target price now on SBI? And is there a case to up the target price? Is there more upside?
Yeah, hi, good morning. Thanks for having me. Yes, we have already increased the target to 1300 on the note. And I think SBI has been delivering pretty strong numbers across the board. There was a positivity and strength. While there was some one-off in terms of the dividend income which came in, which drove that kind of earnings beat. But even adjusted for that, there was strength all over in the results.
Is it sustainable, this kind of performance across parameters?
That's what the bank is really targeting. They are still indicating the ROA to sustain at 1. While if you look at all 3 quarters of this fiscal, they have been delivering higher than that. And in our own numbers, we are writing 1.1 plus ROA for the bank. And even the loan growth that the bank is aiming at 13 to 15, the guidance that they've raised, I think they are well on track to hit that towards the upper end of that range in the current fiscal.
If they do
the way credit environment is shaping up with the loan demand getting better after the deals, also the tariff deal or the EU FTA that has been signed, I think the outlook on demand continues to remain robust. And the GST cuts also that you've seen has driven good uptick in demand in Q3. And that momentum looks to be sustaining in Q4 also.
All right.
So that looks to be a pretty sustainable performance here. Sorry.
Got it, Nitin. So the numbers look quite good, and you're as well quite impressed with the numbers. For the time being, the stock in pre-open is suggesting a big gap up. If I look at the valuations, I think SBI trades around 1.6, 1.7 times thereabouts. How much of the re-rating is in the price? Do you think it can get an even better multiple from here on if they go ahead and achieve all that they've laid out?
I think yes, certainly if you look back historically, you will always find that the current valuations are higher than what the SBI has generally traded at and towards the higher end of the range, if not the peak. And but I think the way the outlook is looking like, both in terms of growth, the profitability and the positioning of the bank when it comes to the asset quality, the margins and the overall delivery across operating parameters. I think this deserves a further re-rating, and which is where we have written a 1.4 multiple on the stock. And unlike 1.2 probably that we might have written a year back or so. And I think as they continue to deliver this kind of growth momentum, and this actually may be a unique year wherein SBI may kind of overshadow the growth by all the top 3 private banks. That is quite a possibility for FY26.
Anything else looking super exciting, super interesting, Nitin, apart from SBI?
I think the large banks are looking good in the current environment, and if you look at RBI has also made it clear that they are more focused around LCR and NSFR, and the CD ratio is not actually the key number which should limit the bank's ability to deliver on the loan growth. And the operating performance continues to remain strong across all the top private banks and SBI. And we have seen a good round of rally in the mid-sized banks in the prior months, supported by some transactions also that happened in the sector. I think in the coming year, supported by this positive macro development and the stronger outlook on asset quality and growth, the large banks can do fairly well in the coming year. And the earnings growth itself, wherein we are looking at probably around 4 to 5% earning growth in FY26, I think this number will move towards mid-teens in FY27. So that will also support the stock performance in 27.
All right, very quickly, before we let you go, Kotak Mahindra Bank is higher. It was higher even in Friday's trading session. Now they're clarifying that they're not going for IDBI Bank. Some were concerned if they go ahead and bite that bank. How big a relief is it for you?
Yes, that has been a relief for the market, yes, because this was an overhang that was there on the stock for some time now. And IDBI is a pretty large entity, and culturally also to digest and integrate the two entities is not going to be easy as such. And the valuation arbitrage also that we have generally seen isn't really so big in terms of this acquisition per se, if it had it happened. And which is where if Kotak is now not looking to do this, it's a positive for the stock. On its own, the bank has been doing well, amongst the best positioned bank in terms of growth. If you look at the top private banks, top 5, And we are looking at a 16% growth from Kotak for the current fiscal. And ROE is sustainably moving towards 2+ range.
Thanks very much, Nitin, for that good conversation as always. PFC REC is the other story that we want to focus on, and Nikhil Negania is with us of Bernstein to run us through that. So they're going to merge. Nikhil, good morning. Good to have you with us here. What does it mean for REC shareholders?
Yeah, hi. Good morning, Krishna. So PFC REC merger, the board has approved the in-principle merger, both the boards. It's not a straightforward merger because if you combine them straight away, government shareholding falls to 41.9%, whereas as per the Companies Act, it needs to be 51% or higher. It needs to be seen whether the government changes those rules as the economic service suggested, or they do a buyback to take it back to 51%. As to what it means for shareholders, for REC shareholders, I'm not sure it's a massive positive, but definitely for PFC shareholders, it's a clear positive as the holding company discount goes away. And both companies together also gain. I mean, together they'll become the 8th most profitable company in India. So possibly could see inclusion in Nifty at some point in the future. Their bargaining power improves. So for example, to the renewable sector, they are both massive lenders. The competition between them will go away once they become a single entity. So those are some of the gains we see for them.
You're saying combined government shareholding will fall to 41.9.
If they merge straight.
Okay. Right. So PFC already owns, REC, right?
And so current structure is, sorry, good.
Go on, Nikhil.
So I think Government of India owns 56% of PFC, and PFC in turn owns 52.6% of REC. So if you combine them straight, it falls to that number, 41%.
Okay. Nikhil, from an investor point of view, if the government holding stays below 50% at that 41.9%, how will investors react to that? And if the government increases its stake to above 50%, what are the various ways via which it can do? And I mean, from an investor point of view, if you have to own the combined entity, which one is better and why?
Yeah, I think on the last one, the answer is easier. Combined entity PFC is the one to own. They are the ones who gain more. A holding company discount on their REC stake immediately goes away, as I said. And to the second question, how does the government take it back to 51%? There are multiple ways. Either they do a buyback of shares from minority shareholders, or they do a pref issuance to them in REC to increase their stake in REC before they merge it. So one of those routes they'll have to take, but it will need deployment of cash. So as per our maths, you need at least 30,000 crores of funds from PFC to take the government stake back to 51% at last closing price of PFC.
This is a bit, we'll get to, but there's a question which is coming in from our banking analysts as well. The limit on bank borrowing exposure, banks can lend a maximum of 20% of tier 1 capital to a single entity and up to 25% to a group. Will this limit the merged entities' sort of borrowing power?
So that is, you're right. So that is the only challenge we see where some relaxation might be needed. So for today, for example, PFC, REC combined, they have about 1.7 lakh crore which they have borrowed from banks. Their biggest source of funds is domestic bonds that they issue, and second biggest is bank borrowings from PSU banks like SBI, etc. So single party lending limits would be hit or could be hit possibly. We don't have the specific details bank by bank, but that could be a place where some relaxation might be needed for these.
So this morning, so if you're a REC shareholder, and lots of people have reached out, Nikhil, asking, what does it mean and what should we do, etc. So what are you telling your clients, institutional clients now? Hold on, hang in.
Between the two, our preference has always been PFC. So that is still the stock we prefer between the two. And this merger also supports that view. Fundamentally, if you ask me, both of them are cheap actually. They are close to one-time book multiple, 5 times earning. You hardly get anything at those multiples in India. Loan book growth is the only challenge which they are facing as Discom health is improving, but asset quality is pristine. So overall, we are positive on both, but prefer PFC over REC.
Just one more, prefer PFC over REC. But if you are a REC shareholder, is there an outright advice or no? I mean, you wait.
It's tough. I mean, this merger per se doesn't help REC's cause much, but it's still a cheap stock. I mean, one could look to rotate to PFC depending on how does it open today. I mean, this news just came in after market hours.
Yeah, yeah. You know, the other one is I wanted to, you wrote on Power Grid, post the numbers. Power Grid was up 17% last week. They've raised their capex guidance, etc. Just a quick word there, and what's the view?
So Power Grid, we have a long-term positive view on the stock. The challenge for the stock has been they are not able to complete their lines on time. As land prices in India have gone up a lot, so Power Grid has been struggling to get land, or right of way as it's called in transmission, on time to complete those transmission lines. So what happened in the result was a positive surprise on capitalization or completion of some of these lines. That's why the stock reacted the way it did. No one was expecting it. And a lot of hedge funds were short on the stock. So short covering also happened is what we expect. So long term, we remain positive, but I think we don't see a massive upside. So our target is close to 300, 310 on the stock now.
Nikhil, great to chat with you. Thank you very much for joining in and providing clarity. The investors will now await the actual swap ratio between PFC and REC. Sudarshan is back with us for his 9:10 call.